In today's complex business landscape, property insurance claims can make or break a company's recovery from disaster. Yet, gaps in coverage, limited understanding of policies, and settlement challenges continue to frustrate businesses when they need support the most. How can we transform this critical process from a source of stress to a pillar of business resilience? Welcome to the Policybazaar for Business show, partnered by ET Now. I'm Kavita Thapliyal, and today we are exploring how the right risk management practices and how proper insurance coverage can help businesses navigate property claims with confidence. Joining me in this conversation, I have Ishwar Chand, Head of Procurement, Celebi Aviation, Ravindra Gupta, Head Broking at Tata AIG General Insurance, Amitabh Diwan, Associate Director and Business Unit Head, Policybazaar for Business. Hello and welcome to this very special interaction we'll be doing on property insurance. And since we've already understood a lot of aspects of property insurance, but today we'll be focusing on risk management, which is connected to claim settlements. So Amitabh, let's just break this down for our viewers. What do you exactly mean by risk when it comes to property insurance, and the kind of risk management that's needed?
See, what happens is, how do we define a risk? As a risk, what we say is that something upon which happening you face a financial loss. That's a direct risk for us. It can be anything, because as an individual, if we were to simplify and say that as an individual, what is a risk that I'm exposed to? I have certain assets, I have certain liabilities. I need to be very sure that if in case something happens to my asset, I'll have a financial loss. It could be as simple as a vehicle or a house that we own, or even as simple as a mobile phone. So similar risks exist in the corporate insurances, because a lot of companies, they own assets, they have a lot of liabilities that they have into, because they have certain commitments they have towards their employees, their vendors, their contractors, and number of other people.
Right.
So what we say is, a risk is something where that corporate will have a loss in case something happens. Manufacturing unit going down, it's a direct loss to the business, to the asset. It has a consequential effect because of the business interruption that it may trigger. Their liabilities would remain same, because kind of the wages they need to pay to the employees remain constant. So what we say is that as Policybazaar or as consultants for our clients, we do a complete analysis of the kind of risk any entity is exposed to. And that involves, first is the very basic, the identification as to what exactly is a risk and how will you get impacted by it. The severity of that risk. There'll be a lot of things which can be insured and should not be insured, because it's not necessary that everything that should be insured is insured, and actually we go back to the insurance company to take a claim.
Okay.
Because few things we retain, because we know that, okay, if it's a 5,000, 10,000 or any amount of loss, if it happens, I'll absorb it. Similarly, a company has a balance sheet, how strong it is, how many risks can they absorb, how many they want the insurance company to pay for. So that's the identification. And then we go on to the severity, because every peril happening may have different severities and the probabilities as well, because it can be a low severity and high probability, or a high or a low probability but a high severity. So bucketing all of those risks actually helps in understanding as to what are the risks there and how an insurance program should be designed for any of the corporate.
Right. So, Ravindra, when you deal with businesses, how exactly do you help them understand the kind of risk they are associated with? Do you also give the same kind of breakup to them? What kind of risk you think cannot be covered even if they want to? How do you go back on the drawing board and explain it to them?
The best way, I would say the best way to predict the future is to create it. And risk management practices, as highlighted by Amitabh also, is the best way to actually create it. And I would say from an insurance company point of view, so having 15 years of experience in the industry, I can say that there's been a significant change in the approach of insurance company towards risk management.
Okay.
So for example, like any company, so there's a increase in the complexities of the risk. Interdependencies are increasing day by day. So any client, any insurer who is good at risk management are always preferred by the insurance companies. So they are given the better coverages at a better rates. And from an insurance company point of view also, we try to support and provide those kinds of additional services as well to such clients so that those claims can be prevented. And I would say the most critical one of risk management is that it helps in avoiding any kind of dispute at the time of claim. So in short, if you would want to say that it becomes a parent-child relationship where the insurance company adopts the responsibility of supporting, guiding the clients so that the claim doesn't happen at all. So that has been the approach of risk management by the client, by the insurance companies.
Mm-hmm. In your experience, how important, how crucial step it is for all the businesses, and how has it been with you, the experience so far?
In my experiences, all the customers or the clients who are taking the insurance or seeking insurance need to do the business analysis and deep diving into their exposures, be it employee, be it asset like properties, or the way of doing the business in new era has exposed the risks in multi dimensions. To mitigate those risks in business operations, we need to assess it thoroughly, get the help from the industry, and then work out to mitigate such risk. To assess the risk and to actually transparently work on it is more beneficial to any of the industry.
Mm-hmm. So when you are working with a business, if you could just explain us via different example, companies of different sectors, how do you help them identify what kind of risk they are associated with?
See, the best way to identify a risk is having a candid conversation with the multiple stakeholders within any company. What happens is, sitting at a corporate office, we have a different view of what's going on onto the manufacturing or into the supply chain, or maybe what legal department is facing an issue.
Right.
So what we try and do is we try and speak to different stakeholders within the organizations who are the actual insurance users. Everybody comes in and talks about the kind of challenges they have in their kind of operations. Logistic may have something exposed on the marine. He may say that, okay, I have a problem on the truck hijackings, which can it be addressed, can it not be addressed, but it is important to write it down as to what exactly his challenge is.
Okay.
Similarly, the finance department may have different things, the plant operations may have different exposures, and everybody comes up with their kind of a list, what they want, what they see it as an exposure, and where they would like to have a coverage on. So what we do is we speak to them, we take down the details, we understand, go to the risk manager, tell them that these are maybe the 100 or 150 risks your organization is exposed to. Maybe 30, 40, 50% of it is not insurable. That is fine, but at least it gives a tick box on a particular risk that it is retained on the balance sheet. It helps take a conscious call and then decide that yes, this is a kind of a policy I should be buying. And then we go back, structure the whole cover, look at what can be covered and at what cost. Because even if there is an insurance available, but the cost is very high, it's not feasible. So it's a complete balance of the kind of exposure it may have and the kind of price they have to pay.
Identification process, you also mentioned there are things which cannot be insured. So what are those, if you could just explain by example?
So there could be multiple things depending on the industries. For example, as simple as a currency fluctuation for imports and exports. Now, currency fluctuation is something which the client has to retain the risk. There is probably no insurance cover that is available for it. So those are the risks which, depending on the industries, we come back and tell that this is something you will have to retain because there is no mitigation measure available.
I just wanted to cover, so the risk like pure risk, okay, so which normally gets covered, but if it is a speculative risk, so those doesn't get covered in the insurance. See, how do we see it from an insurance company point of view? So in simple terms, if I have to say that, first we play detective. So basically, identifying what can go wrong in the entire world, and that word, of course, what all the things can come. Then we play fortune teller. So whatever wrong things can happen, so what is the extent of damage it can cause and how likely that event can actually happen.
Okay.
So maybe the losses in terms of financial, operational, or even reputational damage. And third, the most critical part is we again play doctor. So by doctor, I mean like for the body, we have the health checkup experts.
Right.
So similarly, we have the risk experts which are able to tell you the exact risk in your entire organization across all dimensions. So just to give you one example, in our company we have a casualty risk engineer. So that risk engineer visits the premises, maybe plant or offices anywhere, and they are able to tell the exact risk which you have from a casualty point of view. And it's a unique proposition given by our company. So this is how we are able to, understand, our client is able to understand what are the different risks they are exposed to.
So are we also looking at customizing these kind of plans as per businesses and sectors?
So I'll tell you in a simple way, because as I was just referring, the risks are increasing day by day, the complexities are increasing day by day. So with the increase in risk and with the help of risk management practices, we are able to evaluate the risk better. So we are increasing our capacities in the market. Second, we are able to design the covers which are new age covers. And third, I would say we are also thinking from a reinvention of the entire ecosystem. So just to give you an example, like we recently launched a cyber edge policy. And that policy, of course, it's a policy document, but it particularly additionally covers or prevents any claims to happen. So it gives a coverage for the clients that how can it prevent the claim to happen, that is one. And after any claim scenario, if a ransomware, cyber attack, severe attack, how we have the international experts who can support the client in terms of those incidences as well. So we've designed the entire policy by reinventing the entire ecosystem with help of international experts.
Interesting. What according to you can be done more to enhance this ecosystem?
So more things are required to be done, like the insurances are happening since we are there or since era, but in last 1 decade it has changed a lot.
Okay,
So
for
now
example?
the risk assessment has started. So brokers, insurers, they are collaborating with the clients and industry to make the policies tailor-made, whatsoever is not regulated
Right.
by the regulatory body. They are coming up with specific industry benchmarking, what has happened in history, like past 1 decade or 2 decade. They are coming up with solutions that what should be the assessed value for the properties. Maybe at client level, if I am having a building or a structure, I am used to getting that valuation done in my balance sheet, but more frequently I need to review it. So what is required with collaboration of brokers or insurers, we need to collaborate more, need to have annual review at least to start with, and to assess the risk, what is new in market, then benchmarking, what are the regulations per se, or how it is being covered internationally, the exposures can be mitigated to minimize the losses in case of any claim arises or any accident happens.
So how according to you Policybazaar for Business actually bridging the gap that you just mentioned about?
So Policybazaar with us are since long into business. So what I have seen that periodical reviews are happening with Policybazaar. A thorough assessment is being done onto the premises as well as the property to see that what got changed because of business plan, maybe in past, maybe in future, what we are planning, and accordingly they are suggesting us with the proper coverage of the risk or mitigating our liabilities in case of any claim arises.
When you work with companies or businesses, how does your team actually work with them in sync? Because we're talking about changing times, talking about changing in technologies.
Yes.
So you've got to be, you've got to keep up with the changes over here. So how do you do that?
So actually we have a team who specializes in different kind of risks.
Okay.
The risk engineers that we talk about, somebody may be a chemical engineer, the other may be a civil engineer. So they exactly know as to what can go wrong, because our final objective of buying a policy or that risk management is that when actually the client needs that policy to trigger, that is the claims, if in case they arise, they should respond, the policy should respond. It's not necessary that I stitch the best of class program for my client, but at the time of a claim, there are questions asked or maybe the policy does not respond. So that is why what we do is through all of these activities, we actually are able to generate, or like Ravindra was rightly telling, we simulate the kind of risks or the exposures or the losses you may have. be very clear with the insurance companies that this is an exposure, and also explain it to our clients that all of this is covered, all of this is not covered, so that there's no ambiguity at the time of the claim. So with those specialized engineers, plus also what happens is with the kind of clients we have multiple exposures known to us even in the same industry, and it gives us a lot of learning, because if one sector have faced a certain loss, we can at least take the learnings and give it to our other clients on the similar sector. Or maybe we can correlate as to what can go wrong and then present a complete analysis. So the intention of having those specialists on our side, the specialists who are working with us, understanding with the different stakeholders at the client's end, and also with the insurance companies, like Ravinder said, they're increasing the capacities, they're increasing the kind of covers. We try and amalgamate all of those things, bundle it up, and then provide it, so that you have a good cover. Second, you don't have challenges when you actually need the policy.
Right. But do we really have that understanding of seriousness from businesses to understand this kind of a product?
So I'll tell you, I mean, mostly what we get to hear from our clients as well as brokers, that our company asks a lot of questions, and mainly that too at the time of underwriting. And the basic objective of that is that we don't want to make any assumption. So if we have a different assumptions, it can lead to a debate at the time of claims.
Right.
So if we see, as an insurance company, we have a very comprehensive covers, and day by day we are launching and introducing new products and coverages. So we sign an indemnity bond or contract with the clients with a clear mention of the perils which are covered in the policy, and if anything happens because of that perils, the claims get settled. So it becomes very critical that the client, the broker and the insurance company design this contract in such a way that all the risks which are intended to be covered are covered.
Okay.
And the clients which have a better risk management capacities and capabilities, who are invested in that, they excel in doing that. And I would say that in a normal parlance, they become pound wise and penny wise. Maybe I'm saying maybe penny wise foolish by giving a slightly higher premium, but they become a more wiser person. So that is how we approach.
Your take on this?
We need to know our limitations, as well as we need to know what are the exposures and possible liabilities in case of any kind of mishappening. So what happens that if you are able to adequately cover it, perils are mentioned into the contract. Client need to know what are the limitations in the policy as well as the excess or limits, so that in case of claim, there is absolute visibility that what is admissible, what is not admissible by the insurer or the regulatory body. Apart from that, we need to create an internal team of experts who are able to document while any claim is arising. So that is critical, because multiple times, because of wrong documentations, it took to and fro lot of communication, and multiple times there are chances that claims are getting rejected. So you need to have an internal expertise, cross-functional expertise in your company or as an industry to settle the claim and file it properly.
On claim settlements only, how do we process it? And
So the general notion within the public is that the insurance companies don't pay any claims. That's where we hear everywhere. And the maximum cases also happen in the consumer courts are for insurance itself.
Exactly, yeah.
While the
Why
insurance
does it happen?
companies,
But that's a
right,
question.
absolutely.
Why?
While the insurance companies, you pick up their balance sheets, they'll have an underwriting loss. They have been paying claims day in, day out, but still there exists a feeling that we do not get any claims.
Yeah, the trust factor again.
That trust factor is equally important on both the sides, because one, when you're buying a policy, you should not go in for the lowest price, because there's certainly some coverages which have been reduced.
Oh.
Second is that once you know that what kind of a cover you need to buy, you will not have any challenges at the time of the claim. So like we were talking about the risk identification, the severity, going back to the various stakeholders, also speaking to the insurance companies, this is what we need. Now it's a conscious call, it's a known approach that this is what I will get paid for and this is what I'll not get paid for. that will actually build up more trust, because when the client knows that this is something which I do not get paid off, he does not go to the insurance company and file a claim and does not give them an option to reject it, because finally insurance is a contract of indemnity. If it's not there, it's not there. So what we feel is that this feeling of claims not getting paid needs to be addressed, and that gets addressed only when we know what we are getting into.
Right. So most of the claims get rejected because of what reason?
Majorly because, one, sometimes the policy wordings are standardized.
Okay. So when you say standardized, what does that mean?
So it's regulated. So the wording, say for example, since we are talking about property insurance policy, maybe a fire or an IAR, the base wordings remain same across all insurance companies. There are no deviations. So the regulation or the tariff states that this is a minimum cover to be given. On top of that, you can have certain add-ons.
Okay.
Now, what add-ons to choose, what are relevant to your industry, is something that we work on and tell. So that is why we talk about that careful decision for a policy actually helps eradicate any disputes at the time of claim.
See, I would like to make it very simple. So there are 4 critical factors, I would say. So one is know the risk, and knowing the risk is not just on the insurance company side but also at the client side. So how can we know the risk? We can have risk inspections, we can have safety audits. So there are multiple tools. So one is knowing the risk, which is very critical. Second is knowing the policy. So when the policy is issued, as it is a contract, so it has some exclusions, it has some coverages. So it is very important that client as well as the broker and the insurance company understand the policy itself, what is covered and what is not covered, as we were discussing pure risk and maybe speculative risk. Third is understand the claims process. So I feel that there a lot of things are getting lagged. So claims process is also similarly critical than the policy wordings itself. In claims process, what are the ways, what are the tools which will be required, information which will be required at the time of processing of the claims. So that is third critical factor, that knowing the entire claims process. And fourth is, from the insurance company point of view, with the help of technology, let us have a real time update and the regular reviews with the client. So if these 4 things are processed and are completed in the process part, so there will not be any dispute at the time of claim.
Okay. Your take on this?
So it is true, as a client, what happens practically, that the risk expert of any industry is majorly taking the decisions on procurement of policies, whereas those knowledge or the data transfer is not going to the actual user department when it comes to the ground reality, that where the risk has happened. So most probably, as per my experience, while we are filing any claim, we lose control, that expert people are out of those filing procedures, and other user department, because bigger industries, bigger corporates, there are different user departments who are filing those claims, are not aware actually about what are the perils, what are the policy terms and how to write it. There I see the key collaboration between the broker, insurer as well as the client or industry, that they need to periodically collaborate to understand that if risk arises, how to mitigate it, how to write it, the claim procedure. And I also feel that there should be IT tools for transparency, where it is self-guiding tool which is helping us to file the claim, and it is adequate by the process of filing claim to understand what has been filed and how it is getting processed, or where it is getting stopped by any mean, so that we are able to mitigate those conditions or risk also.
Sure. I mean, looking at the way this entire thing is developing, a lot has been done, but a lot can also be done. Thank you so much for being on the panel today. Thank you.
Thank you.
With that, our special feature of the Policybazaar for Business show partnered by ET Now comes to a close. Thank you for watching. As this series comes to a close, we've explored the critical dimensions of organizational protection, from strengthening cyber defenses to fostering employee-centric benefit structures, from controlling healthcare expenditures to managing liability exposure in expanding operations. We've tackled the complex challenges of claims management and examined the essential role of risk management in property claims. The Policybazaar for Business show has provided organizations with the insights to transform business insurance from a necessity into a powerful strategic asset.